Good morning. I'm Andy Myers at Weiss Research.
I'm Jen Amos, and this is your morning market alert for Tuesday, June 28th. Stocks on Wall Street are likely to give back some of yesterday's gains. Investors are digesting the latest reading of home prices and awaiting more important economic data coming later this week. First up is the Conference Board's look at consumer confidence for June. It's expected to show a slight improvement. Tomorrow we'll get a reading of pending home sales from the National Association of Realtors. And Thursday brings the weekly report on initial jobless claims. That's all leading up to the highlight of the week on Friday, the Institute for Supply Management's Manufacturing Index. It's expected to dip even further after the largest drop since 1984 in May. It will shed light on whether recent economic weakness is just a soft patch or the start of a deeper downturn.
Many investors may choose to stick to the sidelines and wait to see how that ISM report shakes out. And they may also be nervous about Greece's ongoing debt problems. Thousands of demonstrators have gathered in front of the Greek parliament after the country's two biggest unions called for a two-day general strike. They're protesting the new round of austerity measures that the Prime Minister is trying to pass in order to receive more funding from the European Union and International Monetary Fund. The vote is scheduled for tomorrow, and most analysts expect the austerity measures to pass, despite the public's lack of support. A no vote in Parliament would likely lead to a Greek default, which could have massive consequences for the stability of the Eurozone and the global financial system. Reuters reported that European policymakers are quietly exploring contingency plans to keep Greece afloat with emergency liquidity if Parliament rejects all or part of the package.
The uncertainty over Greece's future is weighing on the euro this morning. It got a small bounce yesterday, but has been trending generally lower over the past few weeks, as investors have grown more nervous about holding the currency. The weaker euro, of course, has meant a stronger dollar, and that strong dollar, in turn, has contributed to a broad decline in commodities recently. However, we're seeing a reversal of that trend today. Crude oil is rebounding from a 4-month low hit in yesterday's session, now trading back above $91 a barrel. It's fallen more than $10 in a little over a week, amid concerns about softening economic growth cutting into demand. Meanwhile, gold is rising back above $1,500 an ounce, and silver is once again approaching the $34 mark after a big drop yesterday.
On the corporate front, one of the day's big stock winners is likely to be Nike. After yesterday's closing bell, the athletic shoe and apparel giant posted a 14% increase in fiscal fourth quarter profit, topping expectations. Nike credited the gains to surging sales in North America, China, and emerging markets. The results were a big improvement over the previous quarter, when Nike missed estimates and warned about rising commodity, labor, and shipping costs. Shares of Nike are set to open nearly 5% higher. Another big pre-market winner is consulting firm Accenture. It's jumping more than 5% after Standard & Poor's announced that the stock will join the S&P 500 index after the close of trading on July 5th. Accenture will replace Marshall & Ilesley, which is being bought by the Bank of Montreal. That's the latest from Weiss Research. We'll be back after the opening bell with all the economic data and market reaction and tell you about a big move into cloud computing by Microsoft.